Hi, I'm Keith McCullough, and welcome back to another Real Conversation. This guest is definitely not new to Hedgeye TV or Real Conversation. He's certainly not new to the debate about the U.S. deficit, debts, etc. A lot of people don't like to talk about those things in market terms, Chris, but thank you for making the time. We appreciate it.
Of course not, Keith. Who wants to talk about paying taxes? That's terrible. Anti-American.
And who wants to talk
Yeah.
about real world inflation? You have your new book. Is it
Yeah.
coming out in May, or is it already
Yeah,
out?
the print version was out in May, and the audiobook should be out in about 2 weeks.
All right. Do you read the audiobook yourself or what?
No, I wanted to, but it's a lot of work. And the
Yeah.
guys at Wiley said, Chris, let us do this because they have a bullpen of very good people. And the guys at Wiley and the girls too, they know their business. So I let them go. It would have been a delay. Let's put it that way. I would have had to carve out a couple of weeks and just go sit in the studio.
Yeah.
So that's a big sacrifice.
Yeah, well, then when I go for a walk with my dog, I could listen to your nice voice in my ear.
I should have been a sportscaster. I wanted to be the voice of the Orioles. What can I tell you?
Well, congrats on the new book. How many is that for you now?
Well, this is kind of a redo of my first book, which came out in 2010. But, in 2010, we were all a little busy. Everybody was broke and we were restructuring the U.S. economy. So 15 years forward, and things have, I think, focused more on inflation, more on the impact of inflation on investors now than ever before. And it was timely to bring it out. So I was grateful that Wiley said, sure, go ahead.
Yeah, it's awesome. It's for those of you that aren't familiar with Chris's writings, he can give you a tutorial or a teach-in on the history of everything from the Fed to the banking system that you live in, and the one that you have to deal with, and also on the topic of real-world inflation. We'll get into a lot of those things, but I think that the first thing to start with is exhibit number one, which is the I don't like to call it the big BB. I like to call it the big disaster budget personally, but so the BDB. But on slide 126, even my own team, Chris, needs to change the title. We have developed into a society of meme chasers. But I know what our numbers say on it, and I'd just like to get your take on it, what it means for the future of America from a deficit perspective, et cetera.
Well, the future is fairly grim. It reminds me of my early work in the emerging markets in Mexico and Venezuela, Argentina. As you know, Argentina is turning around after decades of inflation and debt, but we're headed in the wrong direction. And the fact that President Trump didn't just do his tax cuts and then really hold the line on spending and then had to roll the House, obviously, they didn't even get a chance for another vote, tells you how detached Americans are from reality, I think. The fact that people in Washington think all they have to do is extend the debt ceiling and they don't worry about selling the debt is fascinating to me. But they'll figure it out soon, Keith. I'm confident.
I mean, the numbers, I think I'm curious as to whether or not you agree, but I mean, these numbers to me have become so numbing, and we actually look at the numbers. Now, and 99% of Americans don't actually do the rate of change numbers, the history of the numbers. And again, that's partly why we're here to talk about it. But, there was a point in time where 1.5% to 2% deficit was actually a big number for the deficit itself. Now that's what we're going to increase it by.
I know. I worked for Jack Kemp, so in those days, my God, $1 billion, that was real money.
Yeah. So, what do you think that we're in the fourth turning, we're past the point of no return? It's a demographic, the baby boom generation, that's bipartisan on this topic.
Yeah, I think we are in a short-term sense. I mean, is the $40 trillion in outstanding debt an insoluble problem? No. What you have to do is freeze spending for a couple of years, let the economy grow, and then force Congress to basically score everything in the budget. And when you get to the point where we're spending too much, you draw a line across the page and that's it. But we have not been able to do that because of the hubris and the delusional aspects of the post-war period. We think we can legislate economic outcomes. People in Congress really believe that. So they don't worry about deficits anymore because it's inconvenient politically. And I think that's just where we are, Keith. Until that breaks and we have a room not knowing what to do, then, that's when we'll start getting stuff done. And by the way, that's March of 1933. That was the last time Congress really had their backs to the wall, and Henry Glass and Stimson and the rest of them walked in the room and said, "Here, vote. This is what we're doing." So, right now in Washington, you can't even have this conversation.
Well, I mean, I don't even think people have. I mean, when they talk, it'd be nice if AI, given everybody's so infatuated with it, us included, they don't just like attach a time series of U.S. debt behind their head when they're talking. I mean, we can do that. Actually, slide 127, guys, showed what Chris just called out.
Yeah.
All of this is in his head, right? 1933, you can see that point in rate of change terms post World War I, where that drops, and then it's really set to take off. But I mean,
Yeah.
the point of this chart, Chris, is like, okay, you can love Wyatt Earp in the Wild West back in the 1880s or whatever. You can love America at any point in time, but a lot of people did love an America that wasn't addicted to this chart. And by the way, that's just the beginning of the chart. I could show the next one, which I'll do after you respond to this.
I think one of the reasons I did the new version of the book is that it helps people understand how we got here. America at the turn of the last century was not at all focused on the rest of the world. We were focused internally. And it was two world wars that changed the nature of the American economy, forced us to become the world's money, the world's policemen, all the rest of it, right? But that was an anomaly. This is what people don't understand. And what I think we're seeing today is a resurgence of gold as the independent reserve asset in the world. It's going to go up in price quite a bit more, I believe. I've got it in my portfolio and I write about it for our readers. And I think that, the dollar is going to decline relative to other currencies. But does anyone want this job to run this utility for the rest of the world called the dollar? No, it's very expensive. You have to import a lot of inflation to have a big enough currency to make this work. The Chinese don't want this. The Russians don't want this. They want asymmetry in their part of the world, and that's it. So if the Chinese could keep the US out of Asia, if the Russians could dominate at least their part of Eastern Europe, they would be content, but they don't want to become the world's reserve currency. So I think the world has a problem in a sense because they become dependent on the dollar for financing, for trade, even as a unit of account. But ultimately, I think gold is going to push the dollar out of the way because of the policies we see here in Washington, Keith. It's, very simple stuff.
It's kind of shocking and saddening all at once when you look at American retirement accounts and you can see that they don't own any gold. I mean, the number one hedge against dollar-based inflation. Gold's up like 27% this year alone. I mean,
Well, read the interview I did with my friend Henry Smith. I've known Henry forever. He used to live in Croton. He's in the Bahamas now building a repository for physical gold. Why do you suppose they're doing that? Okay. And he had that experience you just alluded to. Back in 2015, he had originally worked in Zurich for the big Swiss banks, and nobody had an allocation of gold. Everybody missed his trade, by the way. And it's still early. I think you can still have a very effective strategy with gold going forward. But it's funny how the world gave up on gold because the dollar worked. It was always that classical arbitrage between real money, which is gold, and paper.
Well, it worked for us. I mean, it worked. I'm calling a Canadian here, calling himself us. I have somehow lopped myself.
That's okay. We love you.
My kids and my wife are American, but the firm's American, made in America. But the just the ability to use and abuse the world's reserve currency. Now, what do you think about that? And telling the world, like, to Canadians, this is the language that Trump gave Canadians. I just got back from my place in Canada this weekend, for that matter, and there's like a whole no matter what the political party, everybody's pissed, right? I mean, so if an American got outside of America and they went to Germany, they get the same thing, Sweden the same thing, et cetera, et cetera. So what do you think about that in terms of the alternative fiat currencies? Like, I'm long the euro. I would have never thought that. There's no fiscal reason to be long the euro. But what I think the machine is signaling and the world's signaling is, look, we don't need as many of those, and we'll deal with each other more. We'll deal with Russia more. We'll deal with China more. I don't know, because it's such a big multi-factor model to get down to the dollar's screws. But what do you think?
You're already seeing that in the data, which is that countries are holding the reserve assets of their neighbors and their trading partners more. they're also holding more gold.
Gold, yeah.
You have the Chinese and the Russians and several other significant buyers basically buying gold by volume rather than price. They are just going to put it in the vault. And so I think when you see these kinds of behaviors, what it tells you is that people have already made a decision to change the allocation that they have from primarily dollars to a much broader portfolio. And again, it depends on who you are. If you're in Mercosur, you may want to hold the assets of some of your neighbors, particularly our friends in Argentina who are emerging quite nicely from their restructuring process. A lot of money is going back there. My wife's from Uruguay, by the way, so that's how I know about these things. And then, all over the world, I think you're going to see regional blocks of trade of currencies reemerge. It's going to be like we wound the clock back 100 years, Keith.
But isn't it crazy though? Like these people have trusted the dollar in many cases prior to this. Do you think it's just a political point now of, I gave all of Canada the finger and now they're pissed off? Or do you think that this is just the time of America's reign with the world's reserve currency, like everyone before it has come and gone? These come in like multi-century increments, these changes. They don't just happen because Trump flipped the bird at Canada.
No, look, Trump is having a necessary conversation, but he's doing it in a very aggressive and crude sort of way. He's from Queens. My family's from Queens, New York. So I understand. Oftentimes I hear his voice and I'm thinking, oh my God, that sounds like somebody I remember from Rego Park. And you understand the bravado and the self-confidence that comes along with Trump. He is interested in getting traction. He's interested in seeing his name in the paper. He loves fighting with people. And what's better than fighting with a country? Why fight with somebody, some politician here in the US when you can go out and fight with countries, right? So a lot of it's personal for him. And yet if you see through what's going on here, I think he senses, and many other people agree, that we need to have a change. The US cannot continue to operate this global currency, first and foremost, because it requires us to run big external deficits, which we have during this period. But also now we see it brings along inflation. And it's the inflationary aspects, especially going back to COVID, which I think have the biggest political ramifications, Keith. If you look at the debate in New York City, for example, over rent increases, we're about to have a Marxist-Leninist mayor who wants to freeze rent. Well, you know what the reality is? When people live in public housing in New York City, they can't even pay half the cost of providing that unit. How much longer is this going to go on? People can't even afford to live in New York anymore. We should be relocating these people to other communities that have lower costs of living. So, all of these things have kind of snowballed in recent years: budget deficit, inflation, a lot of other factors. And I think, unfortunately, we're just heading back into that time every century or so when we're going to have a lot of volatility, maybe see another war. And it's unfortunate when I say that, but that's what humans do. When inflation makes it difficult for people to live, as we saw in the 1920s, they end up having wars. And you've already seen that in Ukraine with Putin and Russia.
Yeah, it's interesting. The inflation, global inflation, inflation in dollars. It's never just one thing. We take a fractal approach and look at everything. But Trump got lucky in a sense because most people who hate him, So let's just say you're some Democrat who hates Trump and you're an economist. Well, your inflation nowcast for the last forecast, which is generally inaccurate for them, has been that inflation was going to explode to the upside. And Powell actually took part of that view, and that's why Powell's looked like he's waiting, for something that didn't happen either. On our numbers, that's actually was just delayed. Now it's about to set up to reaccelerate inflation from here. So it's just coming on a delay. It's not some massive breakup, but again, it's the level of inflation starting to compound on top of each other with instead of a decelerating function for really since January. From January, as you know, to June, inflation went down year over year on a reported basis. But up is the next part of the movie. What do you think? There's so many different questions I could ask in there. The Fed's got to deal with that change, because now they're going to have rising inflation as opposed to falling inflation. You have the politics of it all, which is going to say, hey, I told you so. The guy's going to screw us with inflation. There's many different ways to go with that, but I always start with our nowcast because it's been a very accurate nowcast on inflation.
I think the thing that head fakes a lot of people, especially economists, is that the Fed continued to manage both the reality and the narrative around monetary policy as though everything was normal during
Yeah.
COVID, and then expanded the balance sheet dramatically. And most economists can't even talk about the balance sheet. They don't understand it. So what we saw was is that the Fed went out, did too much. They continued to reinvest even after they did too much. And the result was higher home prices. It's as though we channeled all of the benefits and also the costs of COVID, of dealing with 2 years of moratoria on rent and mortgage payments, for example, which was a serendipity. Nobody even saw that. They said, "Oh, look, the Fed arrived. The cavalry is here," and that saved the day. But the cost was housing, and the thing is, home prices may not go down. So when you do that, you create a huge political problem. And that's why I think, Powell is at a tough place. He should have cut rates last year. He's late, clearly. And now we have deflation in the commercial market. And eventually we'll see a recession with consumers. We don't see it quite yet.
Yeah, I mean, it's a squirrely world where you're coming from these, in rate of change terms. Guys, you just slow the rate of change of inflation, slide 23, where it peaked on a monthly basis at 9, on a quarterly basis on the left side of the chart at 8.6. And a lot of people are pissed because no government official, Republican or Democrat, will talk about the cumulative inflation associated with that, right? They'll just talk about the rate of change of inflation going up or down by the month.
Well, you saw this with Powell during his testimony, right? They kept asking him about housing, and he did this whole little dance about how in the long term it's okay. But, the reality is these people are hearing it, and Trump, is hearing it. If you wonder why Trump is talking about interest rates, it's because everybody in the mortgage space who have seen volumes fall 20, 25% year over year is screaming. And consumers who took out mortgages 2 years ago on the premise that they could refinance, a lot of these were subsidized mortgages. Well, they're not going anywhere either because the yield curve has gone the other way. This is what I worry about, Keith. Imagine if the Fed cuts rates a couple of times this year. We get Fed funds down to low fours, high threes, which I think would be appropriate. But then the long end goes up.
Yep.
What do we do then? And what do you tell homeowners?
That's the trade that sucked a lot of people in, by the way, like when the economy was slowing in April and May, and then they got their face ripped off. People that put on the U.S. recession trade. No, I mean, I was short the market from February to April, and at least I stayed with my process. I mean, it's one thing to have an economic slowdown, or what we call quad 4, but that's not synonymous with an inevitable and pending recession, right? If you put that on in credit, if you put it on in the bond market, anywhere, you would got like literally your face ripped off, career over.
But that's what was so interesting. You went short the dollar at that point. You were talking about right early in the year, Trump.
Yeah, that was tariffs. Good. I mean, you could that's one
now
of the
they're
few
not even paying
away.
attention to him when he talks about tariffs. So the danger is he's going to figure out something else to do to get attention.
Yeah. What if it's like his dad did? I mean, his dad. For people that don't know the history, you'd know it. Old Fred, I think his name's Fred. If it's Frank, I don't care.
Yes.
He wouldn't care what my dad's name is. But the fact of the matter is that he capitalized on government-funded low-income housing, and he became a rich man on it.
Yes, but he also capitalized on to huge accretion in the value of real estate in Queens, New York.
Yeah,
but
it was eventually it was low.
Oh, yeah.
Like it was government. Like he definitely got the government. So my question is this: what if Trump? Because Bessent's no idiot in the background. What if he takes his land bank and says, hey, look, nobody wants to solve for this, so I'm going to create all these zones for low-income housing that's going to be, again, funded and backstopped by the government, and that's how we're going to figure it out, because that's one of the big balance sheet, you talk about the balance sheet items, including gold that they have, land is the biggest. Why wouldn't he get creative and do something like that? Of all the things that he's doing, at some point he's got to have some good things, right? I mean, it's not like this whole Mr. Miyagi tariff on, tariff off thing is different than I'm going to cut your taxes and I'm going to give you low-income housing.
I think now that they got the tax bill done, they're going to do that. Building homes, east of Los Alamos, for example, in California is probably not that attractive. You got to put low-income housing in places where there's transportation. And no, really, I mean, that's where a lot of federal rangeland is. You have services, you have support. So in New York, for example, we should be relocating low-income families out of the city to some of the towns all around the area that have transportation and have other services.
Yeah.
That, to me, would be a winning strategy for those people. But, you know, I think there's a lot of things that Trump will do. The GSEs, for example, Fannie and Freddie, they want to take them out and monetize them to help pay for part of these tax cuts. I've suggested the obvious, which is we ought to buy out all the common shareholders, leave Uncle as the sole voting shareholder because he is in control, right? And he always will be. And then we issue the biggest preferred issuance anybody's ever seen, risk-free, low coupon, probably well inside of JP Morgan. And by the way, the banks are buying out all their preferred because they don't need it anymore. They're being allowed to reduce capital. So I would say half of the preferreds out there issued by banks are going to go away. They won't need them.
So you are positive or negative on the potential of Trump to get creative with the U.S. government's balance sheet?
Oh, yes. Once they got the, let's leave the tax cuts in place part, they don't really need Congress for a lot of these things. They just have to go manage the balance sheet. And yes, you can do it. There are trillions of dollars worth of stuff that are owned by the U.S. Treasury and the Federal Financing Bank. That's where GE went and AIG and all the rest. Have a look in there, okay? Go look at their little annual report. There's tons of stuff. And I think if you manage this more like a business, which Trump knows how to do, it would surprise people how much more efficient the government could become. I'm not talking about the Doge experiment, which was mostly rhetorical. I think that what we're talking about here is just run this enterprise called the United States like you want to be around in 100 years, okay? I was writing about Schwab this morning. They have the worst investment performance of any of the big banks, but I love them, by the way. I pound the table on that business. But there's a lot of low-hanging fruit there. If you just could get up to the peer average on mortgage backs, right? You'd pick up a point more in the return for shareholders.
Yeah, so you do think he will, well, Besant's clearly an American capitalist, and he's nobody's idiot when it comes to
Sure.
the circuitry of the system, including the value of the dollar, interest rates. But on the other hand, you do think that it's going to be hard for them to keep rates down, even if, I think I've read this from you somewhere, where, like Janet Yellen, for people who didn't know what Bill NATO was, like the tornado of Treasury issuance that, now
Yes.
Besant has to deal with. I mean, but now Besant's got his own plan for this, and you don't think that that could keep rates low, correct?
No, you see, this is the difficulty. We don't have a lot of credibility on fiscal issues at the present time. So until the U.S. has a president and also members of Congress who are willing to talk about reducing the deficit, we're in a defensive posture. When you see an issuer, and I learned this in Latin America in the 70s and the 80s, issuing all T-bills, what is that? That's Mexico. Mexico used to have to keep the CETE rate, which is what they call T-bills, at 20%, and then their yield curve went down from there, okay? And that was a penalty rate because nobody believed it. They were all short the currency. So the government had to defend the peso. The U.S. could come under some pretty serious selling pressure this year because Trump has essentially passed on the fiscal issue. And everybody in Washington's with him, by the way. Nobody in Washington thinks that deficits matter. If you actually say something like that in public, you get in a lot of trouble. So, we have got to realize that we are in a defensive posture. We are in the third part of the analysis, going back to the Minsky moment, right? First, you pay off your debt, then you roll the debt. Now we're rolling everything. And when you see that, you know that the issuer is defensive. What are we going to do? Is the Fed going to buy it? If we do that, we have hyperinflation. We already saw that with the banking system during COVID, right? It directly flows through the banks. When the Fed buys a security, you create a deposit. The fact that they've tightened as long as they have, Keith, I think is remarkable. We still haven't heard a definitive announcement of when they're going to end QT, but I think they're going to have to do so pretty soon.
What do you think of, pardon the pun, but tethering it to stablecoin, Treasury issuance to stablecoin, given they have to buy Treasuries?
Mm-hmm. I don't think it's going to really help the dollar one way or another. Stable coins are just, they're like prepaid gift cards. Think of it that way.
I've never heard that before. That's great.
No, but they're marketing, and for Amazon, Walmart, these guys, they're going to sell you dollars at a discount and say, come buy stuff from us. Obvious, right? All the coins to me are zero-sum games because eventually if you want to buy something like a house, you got to go back into the fiat currency in the United States. We can't pay bondholders with crypto. That doesn't work. And let's remember, these things are still not assets for banks. They're not assets under most state laws or gaming instruments. So, meanwhile, gold is now legal tender in more than 15 states, and you can use it in contracts. So I think gold is going to make a significant resurgence as a store of value. Now, we'll use dollars for commerce. We will use dollars for finance. The Chinese love using dollars for finance, right? But then they swap it into another currency. The Japanese have been doing this for 50 years.
Yep.
So the world loves using dollars because they don't have to pay for it, of course. And it's the only currency out there that's deep enough so you can finance things, Keith. That's the key. That's why people will keep using it.
Well, anytime what we call quad four hits, anytime the economy and inflation slows at the same time, you get the market's vote on what they deem to be the most trustworthy currency. And the most recent February to April period was clearly gold. Gold didn't look anything like Bitcoin because Bitcoin's not gold. But that said, the administration does have, this is unlike anything you and I have ever had to analyze or deal with, is that you have everyone in the administration is long of, we separate Bitcoin and crypto, but whatever. They're long of that, right? And they're trying to create policies that, again, tether the stable coin to the treasury issuance. So I don't know. I mean, I don't know how anything's going to play out. That's why I go with what the market's
Well, I can
telling
tell you one thing, Keith. When fintechs and crypto miners become banks, that's when they become boring. I mean, I follow this sector, Block, PayPal, all of these guys who delve too deep into crypto. Guess what? Snoozer. They all get bank charters, and that's the end of it. They're not exciting anymore. So the fact that the stable coins are all going out to get bank charters, mostly to evade state law regulation. Let's face it, they are regulated as money transfer businesses until they get a federal banking charter. To me, there's no alpha here. You're running a utility. You're gonna, trade or speculate on the not stable coins on the side to make money. That's Robinhood, by the way. I don't know. I think there's a limit to the coin phenomenon, but I don't think there's much of a limit to gold. And eventually even silver may come back, but we've been waiting for that for a century? We talk about that in the book.
Yeah, I mean, I have plenty of silver that I'm long, and it has been, it's had a good run. I mean, it's fine, but it's not made all-time highs like gold did over the quad four period that I was talking about. That said, you still now have the relationship between gold and interest rates that will, well, I'll never say never, but historically, when you get rising interest rates, gold does not like that. I mean, look at gold correcting. It's not just a daily thing today, but this is definitely a thing. So if you think, taking it, I'm trying to take the Whalen view like holistically here. If you think that the aggregate, is going to equate to the long end starting to go up, even if, we haven't talked about this yet, even if Trump appoints somebody to cut by 100 basis points, that you get the steepening and the long ends going higher, gold's going to have to fight that. That's going to be relatively new versus February to April when interest rates were piking lower.
Yeah, when you cut rates, you make paper more attractive. And so clearly you'll see a little bump in the mortgage market, you'll see a little bump in stocks. But the question comes, how do you do that? I think Trump has mishandled the situation with Powell horribly. He should have just let the man finish his term, go off into the sunset, and then had a new name ready to go. Now Powell may stick around. He may do a Mariner Eccles and just serve out his term as a governor until 28, just despite Trump.
You think?
No, listen, this is personal. Everybody who becomes a governor defends the temple, right? Doesn't matter whether they're Republicans or Democrats. And so this is the trouble. You have Bill Pulte, you have all of these surrogates for Trump out screaming and yelling at Powell. All right, I think Powell was wrong. I think the board and their model are wrong. But, there are ways to communicate this in a constructive way that won't hurt you later on. So if they drop rates too fast, to your question, I think it's going to be a shit show. I really do. Yeah. I think the long end of the curve could pop. And guess what? We still have a mark-to-market problem with banks. Mm-hmm. All right, go ask Brian Moynihan at Bank of America how he'd like to see a 5.5% or 6% 10-year.
Right?
Okay.
Let's put that, as we say in the parking lot for a second. We'll come back to it. But on the Okay, let's take. Okay, I replaced Powell. I put in David Malpass. He cuts by 100 basis points. That's just an example of a varietal out there. You know, like everyone's got their hand up. Me. I want to be your new puppy, or whatever. You know, puppet. And that would, I mean, the market globally, global currency market has read that as a negative credibility trade for the U.S. dollar and by the credibility of U.S. monetary policy. Do you agree with that?
Yeah, I do. I think it all depends on how you do it. I could make a case that we should have a Fed funds rate, low fours, maybe high threes, because it's a penalty, you know, it's punitive now.
Yeah.
The short end of the curve is where you store new securities that you're about to sell. Okay. It's for warehousing loans, that sort of thing. The long end of the curve is where we price this stuff. And so you have to have your eye on both. And Scott Bessent talked about this early in his term, right? But we don't hear anybody talking about the long end of the curve now. And I think they're going to try and jam the short end and just hope. You know, you heard Peter Navarro the other day, right? We'll just drop interest rates and see what happens. That's not how you want to manage this. Okay. Part of the credibility of the United States is the mystique. If you take all your clothes off, there's no mystique. So, you know, let's try and manage this process in such a way that we end up with lower long-term rates as well as lower short-term rates. And the only way you do that is by not spooking the market, Keith. You know what I'm talking about.
Yeah, well, but you know, like people routinely get this wrong too. I mean, when bond yields are breaking out to the upside, historically that has meant the economy is accelerating alongside inflation. I mean, that's what happened from Trump's election to really to January, is that was that was a very different setup than a lot of people were prepared for, and B, you know, took out all the newsletter writers because they were all calling for like the end of the world again, and that's not what happened. You know, the economy accelerated. No. The economy accelerated from October to January. That's an empirical fact, in as much as it slowed from February to April. So, like, what do you say about that? I mean, that's what Bessent would turn around and say, look, we can grow our way out of it. You know, like if we start reaccelerating economic growth, I could also, say the cow's going to jump over the moon, but that is a fact that rising bond yields don't just have to be a function of the U.S. sovereign credit crisis or what people want to write about.
No, but it's also, once the Fed stopped being the buyer of last resort, especially in mortgages, spreads widen, and they've remained wide. That's probably appropriate. But I think the more important point, though, is that you really want to try and take the conversation in the direction of fiscal restraint, even if Trump has to do this in small pieces as he goes, because that should be the legacy. In the last 4 years with Biden, no one cared. They just, they figured that they could issue debt forever. And that's unfortunately how most economists see this. But I would, say again, there's deflation out there right now, Keith, in the commercial space, private equity, private credit. Isn't it amazing that the Fed ran the stress tests and they ignored private equity exposures at the big bank? I mean, this is crazy. But yet, I think that to me is worrisome, because I've seen banks now with 3/4 of lower yields on loans, lower deposit rates. You know why? Because they don't need the money. They're folding their arms. And that's a bad sign. So I think Bessent actually has a deflation problem on the commercial side of the ledger. Consumers, we'll get to that next year. Consumer default rates are still not horrible, but they're going up slowly.
Yeah, commercial credit, the asset bubbles that we had, if you just raise the cost of capital, you're going to get some disinflation to, like, you're using deflation. You want to mince words?
No, but listen, you asked about Fred Trump before. Fred's world was 50 years of the equity in those buildings in Queens going up. I rated all these banks when I was at Kroll. Now, not only are the valuations going down, but you could argue that 2% inflation target at the Fed is kind of the minimum to make commercial real estate work. Because if they don't go up 2% a year, what's happening, right? They can't refinance, they can't take cash out. For many, many years, developers would refinance these properties and take cash out. Yep. That was their capital. So we're in an opposite situation now. Multifamily is in a terrible state. It really is. And the politics of inflation are going to make it worse. Look at New York City. We got a guy who seriously thinks we can cap rent and not have these buildings fall apart around our ears.
Yeah, we have. Look at guys. Show slide 87 on, and this is not New York City. This is the aggregate, which is more more frightening because New York's way worse. But on the right side, we show consumers' 1-year rent expectations. Chris, this thing has gone vertical, man. Like it's doubled versus where it was in 2024. So, it's also interesting on this chart. We show the polarization politically of expectations, right? You look at Democrat expectations versus Republican expectations. It's like you're asking a different question. It's like there's somewhere in there are many loaded questions. What do you think? Like on the political partisan hackness of it all. Never mind just if you ask anybody about the rent, it doesn't matter what party they're in, you got that. But on there is there or is there no inflation problem? Republicans apparently are still saying no.
Well, I think they're on the wrong side of that argument. If you look, I'll give you an example. Con Ed has just proposed a rate hike for electricity in New York State. That is going to be quite a fight. They're being forced to hold meetings all over the state. They will be well attended. And again, inflation is not a partisan issue. It affects everybody. So whether you're a landlord of a building or you're a consumer or whatever it is, doesn't matter. It affects everybody, and it is affecting our politics dramatically. This is why what Powell did wrong, and I do agree he did a lot of things wrong during his term, was to do too much. He had Janet Yellen and the rest of these progressives on the board, and they said, oh, well, we got to keep reinvesting. We got to do this and that. And that was fatal because not only did it generate the losses at the Fed, which are going to continue, but it did horrible things to housing that were really unnecessary.
Well, I mean, the general problem with the Janet Yellen Fed or the Powell Fed, to me, is the same policy board, same process, inaccurate forecasting process to start. They're constantly playing catch up to the prior mistake. Yeah. Right? You said, exactly. I think they should have cut already. I agree. I mean, they should have cut when the economy is slowing, not when it's reaccelerating.
Yeah. Well, you remember last year, we had a de facto rate cut. The market rallied. People made a lot of loans.
Yeah.
We were writing sixes. Ginnie Maes tend to be about 3/4 of a point below conventionals. We were writing 5.5s in Ginnies. My God. A lot of firms made a ton of money in the third quarter, and it rolled into the fourth quarter. That's why you had those stronger numbers, Keith. Mm-hmm. You had a good third quarter, decent fourth quarter. So it comes into the first part of the year. Okay, fine. But I still think behind the scenes, we have a structural deflation going on in commercial assets. You didn't hear anybody, shedding tears about landlords during COVID, and you certainly don't hear that now. And I think yet, we can't treat these people as the enemy. They didn't do this. And if you want a nice place to live, they have to keep the rent at market. Imagine the fact that everybody in rent controlled housing in New York City doesn't even pay half of what the unit costs the city. That's not going to go on forever. Eventually the city will have to sell those units and get out after 100 years, by the way. Remember, that's all Robert Moses.
Do you think that what's going on politically through the most recent surprise in New York City politics, for that matter, do you think that is do you think that's the canary in the coal mine for the rest of the country, or it's just completely different?
It's an extreme example, I think.
Yeah,
it's more extreme because New York is the progressive capital of America. There are other cities that would like to be like New York, but the historical antecedents, Moses, some of the other people in that period made possible all of these things in New York. You would never see this happen again in another city because they couldn't afford it. My ancestors were sandhogs and railroad men, so that labor cost in the old days was so low compared to today. It's not even, you can't even have a discussion about it.
Could you envision something like you talked about, wars? I mean, you could have internal revolutions by district at this point, depending on where you live.
We'll have another civil war, the secession of the South, right? I don't know. It'd be tough for the blue states. The blue states would be like Pakistan because you'd have California on one side and the Northeast on the other side, a little bit in the upper tier, and the rest would be red.
Yeah, well, I mean, it's going to get more interesting at a faster rate. I mean, do you also, like, when you think about let's go back to the Fed. You said that Powell might do, what'd you say, what Eccles did? You pulled that out.
Mariner Eccles. Yeah, it was.
The
It's.
Eccles
I
building
actually
is in
talk about it
that
in the
Eccles?
book. That's right, the guy
Right,
they named the building after.
right.
After World War II, when Harry Truman was in the White House, he wanted the Fed to keep rates low. They had kept rates stable during the war so that bondholders wouldn't take a loss, right? Remember, banks and the Fed were the guys who provided financing during the New Deal and the war. There was almost no private sector finance. So the Fed at that point had decided two things. Number one, they wanted to get the freedom to set rates because they were worried about inflation. And number two was they were in the process of thinking about creating the primary dealer system, which would allow the federal government to finance its debt away from the central bank. And they did this with repurchase agreements. Voila, it all happened. There's a wonderful paper that Josh Menand and Lev Menand did for Columbia Law School that I really recommend to your viewers. It's about the legal antecedents of the Treasury market.
Hmm.
And yes, you have to sell Treasury bonds. They don't sell themselves.
Yeah.
So
I,
anyway, the point of all this is that Mariner Eccles got into a pissing contest with Truman. Truman didn't reappoint him as chairman, but he stayed on the board anyway as a governor because they don't run coterminously, right? The two terms are different.
right.
So he supported Tom McCabe, who is the chairman who won back the Fed's independence, one of the great stories in the Fed's history. And eventually Eccles retired. But then they had Mariner Eccles come on, or excuse me, William Chesney Martin, who was supposed to be Truman's guy, and he ended up defending the central bank even more. So when you walk in that door, Keith, it doesn't matter who appointed you. You become a steward of the central bank.
Yeah, that's reading people's body language is always critical to analyze their psyche. And if you watch enough press conferences like you and I have, God forbid I have, Federal Reserve pressers. I mean, I live tweet them. It's just painful. But what you do is
Yeah, it is.
if you watch the same monkeys at the zoo all the time, you get to know when they're picking their nose. I mean, it's pretty obvious. So this most recent time, he was like, it was almost like, when an older man in your life that you might know that has secrets but doesn't want the children or the grandchildren to know, and then all of a sudden you're asked about that thing. Like when Powell was asked about about Trump and Trump replacing him, he's like visibly agitated, right? Like you can't give that one away that you don't really care, that you're just going to do what's best for whatever he says. His stock answer for this. But he, to me, looks like absolutely affected by this, and that's why I wonder if it's possible that he could pull an Eccles. Like he's being tortured by this. His reputation means a lot to him.
Imagine the staff. The staff is telling him, because he runs the staff, look what Trump is going to do to the central bank if you retire. Okay? So if he decides to stay on the board, then Trump is going to be forced to either appoint Mickey Bowman or maybe Waller, who I think would make a great chairman, because there won't be any open seats. And that will make Trump crazy. But the problem is, it's the reality. He can't remove the chairman of the Fed without an impeachment process. That's it. They're trying to look at the headquarters. There's many other things that they could look at. But I think ultimately, Trump is really, really misplaying this whole situation with Powell. He should have played it totally different.
Well, he's not going to. Is there anything like if you look at him versus Elon when when he sinks his teeth into it? I mean, good luck. I mean, against Trump, I would be shocked if he backed off this Powell thing and said, "Well, really, he's great. Yeah, he's doing a great job. I got to keep him, even if he doesn't cut rates." Like, I can't. Maybe it's my own mental block, but can you see Trump turning on this?
I think he should be quiet. I hope Steve Miller and others who run the White House are going to make him be quiet. Because if he wants what he wants, which is his own Fed chairman, and eventually some other governors too, by the way, then there's a way to get that done.
Yes.
In my book, I tell the story of how my dad got Paul Volcker reappointed. And, he got Ronald Reagan to call him on a Sunday night. That's how it happens. So there are ways that you can do this, but I think a lot of what Trump is doing with the Fed is just rhetorical. He's out talking to his constituency, banging on the table, because remember, he likes to fight. He wants someone to fight with. The Fed is not something you should do with a fight. The Fed is more subtle because ultimately that's the financial markets, the dollar, everything else. And if the markets come unhinged, Keith, there's nothing that Donald Trump can say about that that's going to fix it, right?
Well, I mean, thank God we have Scott Besson in there because he can remind him on any given triggering day for I call him Pump, but Trump. At least you
But
have
he's
somebody.
an outsider. Listen, Navarro, Miller, and Steve Bannon, those are the three made men in the Trump presidency.
You don't
Everybody
think
else
that
is
Scott
external.
Besson, if he walked into his office or texted him or whatever they do, couldn't say, "Hey, look, dude, you're going to blow the whole market up." He's not going to listen.
I don't know. I really don't. I'm not. I have no way of gauging that relationship
Yeah.
other than what we see from outside. I hope so. Treasury is the most important agency in Washington.
Yeah.
The professional staff at Treasury run the place. So my hope is that there's enough senior, serious people around Trump that they are going to moderate his tendency to fight, is what it comes down to.
Last question, just because I put his name on the table a couple times. What do you think of the job Scott Besson's done so far, and what do you think he could do worse or better?
I think he's done a fine job. I don't think he should have given up the policy point regarding long-term debt. I think he should have issued, as they were planning to do early in the year, and let rates rise. Because if rates rise for the long-term debts, if rates rise for mortgages, you can then go up to Capitol Hill and say, hey guys, we need to work on the deficit. And that would empower the Republicans, particularly, to go right back at the Democrats. Don't let them regroup. Keep pounding on them on deficit reduction. Because the amount of spending increases during Biden were crazy. It's almost as though people wanted the country to fail when you look at some of these things. So I think that's what they've got to do. They can't give up on the deficit because to do so means you're going to fail. We can all see the numbers.
I just knowing the guy and him, full disclosure, former Hedgeye client, institutional research client before all this happened. But, he listens to, God forbid, people like you and I. I mean, he actually would read something that you or I wrote and take that into account if it was thoughtful, empirically accurate, et cetera. Whereas Janet Yellen,
I know that's true. I wrote something earlier in the year that said, let people buy all the coupons from COVID, all that low coupon stuff that the dealers don't want, and pay their taxes with it. They get par when they pay taxes or tariffs.
Yeah.
Just buy them all out. Because they don't have the cash to do it. He wants to, but he doesn't have the financial flexibility. Imagine if you told BlackRock and all these guys that they have a tax asset out there. And you know where that idea comes from? Argentina.
The real OGs of debt. Yeah, but with Yellen, I'd have no faith whatsoever in that same statement. I mean, so at least for me, there is some saving grace to change. Is that somebody might actually listen or pay attention to this conversation, and I just want to thank you for having it. You're always awesome on this format.
Thank you, sir.
All right, he's Chris Whalen. He's one of a kind, right? I mean, you keep following him. He's a very additive to the community on Twitter. He's constantly putting himself out there, his thoughts out there, his book. I think he said the hardcover's pending, so go take a look at that. Thanks for joining us.